Hi, everybody. This is Jamieson with Perpetual Wealth Systems. I want to thank you for stopping into this relatively short video. We're going to talk about the power of high cash value life insurance, maybe like you've never seen it before. I think we're going to teach you some things that you haven't been exposed to in the general marketplace and things that can help you, you and your family, business, create tax-free generational wealth. We think you're really going to be excited with how the program works. So with that, let's get into it. All right, so the first question is, what exactly is high cash value life insurance? It's a very specifically designed type of whole life insurance policy. And I have to say whole life, it's not indexed universal life. We'll talk a little bit about that later, but it's not the same thing as indexed universal life. It's built on a whole life structure, but it's built in such a way to give it high starting cash value month number one. And it's the kind of policies that banks own by the billions and corporations own by the billions. I'm going to give you some stats on that in just about 5 minutes to show you how much of it they own. So when you start to realize that all the money puts money there, you start to realize that maybe you should be putting some money there and treating it like an asset class, just like banks and big corporations do. So why do banks and big corporations use it? Very simple. It is a great place to store liquid money that compounds tax-free, that you can have access to anytime you want, for anything that you want, without having to explain the use of the money to anybody. So the same benefits that go along with those kinds of policies, you can achieve the same benefit with your kind of policy that we can set up for you. So why haven't you been shown this kind of stuff before? Well, I didn't realize it till I got in the industry, but the traditional life insurance industry does not train their people on how these kinds of policies work. And maybe the reason is because they're a little bit more intricate, and they also deal with terms like, retirement and income streams and taxation. And a lot of insurance reps just don't want to deal with that. They want to sell traditional insurance, and that's fine. That's their niche. That's just not our niche. Our niche is high cash value life insurance. All right. There's not that many carriers that will build a policy with all the benefits I'm about to give to you. There might be 12 to 15, max 20 carriers nationwide that will build some form of the kind of policy I'm about to describe. All right. So when you consider there's probably 200 life insurance carriers, less than 10% play in this space. So number one, you have to be hooked up with the proper carrier. And number two, even once you figure that out, you have to understand how these policies are structured. All right. And we can help you with that. So you may have heard the terms infinite banking, private family banks, private vaults, perpetual financing. They all basically mean the same thing. And that's using the power of and velocity of money, volume and velocity of money inside a life insurance contract. So can you do it with these kinds of policies? Absolutely. And we encourage you to do so. Could you use the cash value in the life insurance policy as tax-free income when you retire? Absolutely, you can. That's going to be one of the goals. And also use of the cash during the time you're getting to retirement, right? You can strategically use the money inside that policy to save outside interest, to recapture depreciation on items that you have to buy that are going to depreciate on you. All kinds of things you can use these for. We're going to get more into that. A little bit about me. I think it's important that if you're going to listen to somebody flap their lips, for the next 15, 20 minutes, that you know a little bit about them. Over 30 years inside business and real estate and finance. Been fortunate. I've been written up in a lot of different articles. I've written a lot of different articles for major publications, been interviewed on dozens and dozens of radio shows and so forth. I don't want to pound my chest. It's just, you have to let people know that you do know your topic, and I'm invited to speak on this topic all over the country. All right. Maybe you've even seen me there. Maybe you'll see me at a new event. But in the meantime, you at least know where I'm coming from, what my background is when we talk about these kinds of matters. I've been fortunate. I wrote two number one best-selling books. The first one was The Perpetual Wealth System, and the most recent one is Wealth Without Stocks or Mutual Funds. Now, I'm not here to sell you books, but if you were to buy one because you like what you see here, make sure you buy the most up-to-date one, and that's Wealth Without Stocks or Mutual Funds. We've got a ton of great praise about it. It's got all kinds of things in it, much more than what we're going to talk about in this brief video, but a lot of positive, powerful topics that can change your life. A couple things what others have said that's on the front cover of my second book is from Jack Canfield. You may or may not know that name, but Jack is the best-selling author of Chicken Soup for the Soul, that entire series. So he knows a thing or two about personal development and finances. And he read what my manuscript, and just thought it was very different, very powerful. So he was very kind to put a nice testimonial for me. Secondly, is from an actual client who interviewed all kinds of different financial advisors and insurance brokers. And she went with us because we just brought so much to the table. She had a hard time saying no. So we have a lot more testimonials. We're not going to spend any more time on that today. If you want more, I'll be happy to get them to you. All right. So let's talk about, where does money put money? Because if you listen to any of the traditional financial advisors, the ones that are on TV today, the Dave Ramsey's, the Susie Orman, they will all tell you that life insurance is a lousy place to put money. Don't do that. Buy term and invest the difference. And to be fair, if you're talking about very traditionally structured life insurance policies, they might be right. But the problem is they don't understand, or they don't have any need to understand, any want to understand, that there's a totally different way to structure these life insurance policies. And ask yourself a question: if it's such a lousy place to put money as they claim, why does all the money put money there? Here we go. Here's a quick slide for you. So these numbers will go up and down based on different years. This is a few years old now, but regardless, you see the kind of money that's flowing in and out of these policies. JP Morgan, almost $11 billion of their money. Wells Fargo, almost $18 billion of their money. And these are money inside life insurance contracts, the kind of contracts I'm talking to you today. And 21 billion for Bank of America, and even PNC 7.7 billion. And that's just the tip of the iceberg. You can rattle off bank after bank, and then major corporations after major corporations. In fact, banks own so much of it, they call it BOLI, bank-owned life insurance, and major corporations also own so much of it, they call it COLI, corporate-owned life insurance. So that, and all the famous family dynasties, the Vanderbilts, the Rockefellers, the Kennedys, they've been using this stuff for generations to grow and protect wealth. So my question is, why aren't you? Well, the answer is because nobody's ever told you that you could or that you should. And in fact, many of you have been talked out of it by traditional financial sources. All right. So just know that if you choose to set one of these up, you're in really good, really wealthy company. Okay. And here's why they set these kind of things up. Okay. First one, there's all kinds of benefits. The first one is there's no risk of loss to your principal. So whatever your starting cash value is, it can't go backwards. So you have principal protection. You have contractually guaranteed growth, meaning your money is going to compound forward every year, guaranteed in writing. That growth, along with the dividends on top of the guaranteed growth rate, because it's underneath the shelter of a life insurance policy, it can be totally 100% tax-free. All right, here's a big one, especially for business owners and for entrepreneurs. Your cash value is accessible anytime for any reason, without restrictions, without penalties, without taxes, and you can do anything you want to with the money. So if you wanted to finance your own automobile and structure a payment back to you, you could do that. How about equipment? How about loaning money to other people on a secured basis? It's called private lending. How about down payments on real estate? How about any opportunity that comes up? If you want to use this particular cash value for that, you can, without any restrictions, without any taxes, without any penalties. All right, so that's a big one. You can't do that with 401ks and IRAs, and much more difficult to do it. There's all kinds of hoops that you have to jump through. Money has to be paid back in a certain amount of time. If not, there's penalties, interest, all kinds. Those accounts really aren't built to be a bank. And yet this kind of an account is built that you could bank right out of it if you wanted to, meaning take money in multiple times per month and put money out multiple times per month. And you can do that out of these accounts. I'm not an asset protection attorney, so chat with one, but almost anybody you chat with will tell you that there's an extra layer of asset protection, and this is state to state, based on the kind of account that you set up and based on the state that you're in. But there's almost always extra layers of asset protection for money inside life insurance contracts. You can recapture principal and interest tax-free. What does that mean? It means basically being the bank. These are very liquid accounts. So you can, instead of paying an outside lender on a car and watching the car go down in value and you lose all the interest that you pay on the loan, what if you financed it out of your life insurance policy, structured a payment back to yourself, picked up the interest you were going to pay out anyways, and then that stayed in a tax-free environment that's going to compound for you, and you recaptured the depreciation that you would have lost on that car. Because after 5 years, let's say you structured a 5-year payment back to yourself, the car is still only worth, let's say, $5,000. Maybe you paid $30,000 for it, right? But you've recaptured all that money. That $30,000 plus interest now is back in the policy. So you can repeat that process. So think about that. And that's just with one income stream. You can use these policies for anything you see fit. All right. Easy access to capital for the rest of your life. So when you borrow money out of these, they don't care what your credit score is. They don't care that you lost your job last week. They don't care that you're ill. They don't care about any of that stuff. They just want to know how much is in there. How quickly do you need it? Where do we send it? It's all they want to know. No credit scoring, anything like that. So it's the easiest money you're ever going to access in terms of taking out a loan on the policy. Okay. You've got the ability to put large sums of money into these things, unlike qualified plans. So I do have quite a few clients all over the country that are putting in $200,000 a year, $300,000 a year into these policies. And they're choosing to do that. Why? Because they look at it as very similar to a Roth IRA, but with all kinds of other benefits. And if you're a high income earner, you can't even open up a Roth IRA. But the same restrictions that are holding you back in the Roth IRA or qualified money world doesn't exist inside the life insurance world. So if you're fortunate enough to be a high income, high net worth person, and you want to put 6 figures, even 7 figures away inside of a policy that's going to generate growth and dividends tax free, that gives you access to the cash, et cetera, you found it. This is a good spot. But if you're not wealthy, if you're not that high income earner, it doesn't mean you can't use this. You're certainly going to use it the same way the high income earner is. You're probably just going to use less dollars, but the structure and what you can do with it are going to be the same. Okay. Now, this is a life insurance contract. So when you pass away, eventually we all do, that money, the death benefit, is going to go tax-free to your family. So the cash value is there for you to use during your lifetime, tax-free, and there's a death benefit paid out tax-free to your family after the fact. Tough to beat that. All right. If you do borrow money out of the policy, you choose the repayment terms on any loans. Okay. So I'm not going to dive too deep into how loans work, not on this video. I'm happy to talk to you about it personally. But just know for now that if you don't want to make a payment for 6 months or 12 months or never make a payment, you can do that. You never get a threatening letter. You never get a threatening phone call. It doesn't affect your credit report. Same token, if you want to structure a monthly payment that comes directly out of your checking account and goes back to your life insurance policy to pay down a loan, you can do that. And all points in between. So you want to send it some money when you have it? Great. Want to send 1,000 now and 5,000 in 6 months, or any way you see fit, you can choose to pay back or not pay back loans. And that's very powerful, especially if you're going to be using that, the cash value, very strategically throughout your life. Okay. Now, long-term care protection built in. Now, this is actually called a chronic illness rider. It's not actually long-term care insurance, but it's built to help you during long-term care, or maybe if you need a nurse to come in. Pay attention here, because I have some clients that are in their 60s, and 70s, that set these up strictly for this. They don't care about all the other benefits. What happens is when you put money inside the policy, it generates a bigger death benefit than you put in. And if you need to, you could actually use that death benefit during your lifetime to help pay for home health care, long-term care expenses, nursing home, those kind of things. So it's called asset-based long-term care. It's very powerful. And I have some clients set these up strictly for that, because that's all they're concerned about. They don't want to work their entire lives, try to leave money behind for family, foundations, and yet have to give it all up during an extended illness. All right. So there's ways to combat that. We can show you how. Okay. Also, accelerated death benefit. That's something you hope you never have to use. If you get diagnosed with something terminal, again, you can access a portion of your death benefit early. Last but not least, I come from the real estate world, and I work with a lot of real estate investors. So you have the ability to combine life insurance policies with real estate strategies, private lending strategies, business strategies. Think of it this way. You can strategically borrow the money out, do good things with it, and acquire other assets outside of the policy that are also going to pay you income. Pay those loans back into the policy. So at the end of the rainbow, there's a big pile of tax-free money that you can create a tax-free pension plan and draw a check every month if you'd like. All right. And there's also going to be other assets if you use that money strategically. So if you look at all the benefits that are thrown into these policies, you start to see why money has been using these kinds of policies for generations, and why you should think about it too. Okay. Now, very quickly, some of the things you can do once this policy is set up. We already talked about using it for asset-based long-term care. There's such a strategy called premium financing. If you're a high income, high net worth person, and you'd like a large life insurance permanent policy, but you'd like the bank to loan you the money, we can make that work. All right. And we can set up what's called premium financing, where the bank will actually loan really large premiums to set up large life insurance policies. Not going to spend any more time here. Just know that it exists. If you have an interest, reach out to us. How about key person insurance? If you own a company and you could insure the one person or persons in your company that's very important to you, you can actually insure their lives with these kinds of policies, and you own the policy, which means you could have access to the cash value, use whatever you want to. In the meantime, if something happens to that person, you're not in any big rush that you have to hire somebody, because there's a payout you got from the life insurance portion of it. Okay. Executive employee bonus programs. So I do have some people who have set these up instead of 401ks for their employees. Right. So Think of it for a minute. I mean, this could be, a lot of people do use these as retirement accounts, even though they're not called retirement accounts. They can function in that capacity if they're set up right. So again, life insurance instead of a 401k, in addition to a 401k, with a 401k, you name it. You're the boss. You can set it up any way you want. But understand, this is going to be a tax-free compounding asset that you're going to have for the rest of your days if we do this right. And you're going to be able to turn it into a tax-free pension plan. All right. You can multiply your estate with a single premium. So, real quick example, you've got $100,000 that you're going to leave to your kids and grandkids. That's set aside. You don't need it. You don't need it. Well, what if we multiply that? If we put it inside a policy and all of a sudden it was worth $250,000, the death benefit was worth $250, just as an example. So now when you pass away, instead of leaving the 100, you're going to leave the 250,000. Which one's better? Would you rather inherit 100 or 250? This isn't hard, right? So we do have some clients we set those up for because that's what they want to do with that particular piece of money. All right. College funding. The 529 plans are just loaded with all kinds of rules and restrictions and timeframes. If you fund a life insurance policy, the insured might be a much younger person, could be a kid, a juvenile, but you're going to own that policy and you're going to control the cash value as to what happens with it. So if you want to help send them to school, help them launch a business, there's no time frames on it like there is with 529s. It can be a very, very nice alternative to a 529 plan. So just something to keep in mind. Partnership insurance. If you have a going concern that's a company and you have partner or partners, if you haven't set up for this, you might have a buyout agreement, but if that buyout agreement isn't funded with life insurance, it's not out of the question. You could end up being partners with your partner's spouse and their family. So if you don't want that, think about using partnership insurance. And if the partnership insurance goes, if you break up the partnership somewhere along the line, you each take your policies with you and take them into private life. Okay. IRA wealth transfers, that's a little bit more advanced, of bleeding money out of an IRA over time, spreading out the taxes so you're not paying as much, and then funding a tax-free vehicle, something like this, that allows you to draw on in retirement when the market's down. If you have money in the market, you don't want to be taking money out to live on when the market takes a big dip. Okay. Tax-free generational wealth. So maybe you set a policy up on you, maybe you set it up on your spouse, maybe you set it up on your kids too. And you won't do that all at once. You might do that over a period of years. But what happens is now if the kids have policies and you pass away, you'll have your own death benefit that gets paid out to them, but there'll also be other policies you set up that are on their lives that the ownership of them would go to your kids in this example. And when they pass away, hopefully many, many, many years from now, there's a big death benefit paid out either to a trust, to grandkids. You can set it up to a trust and then decide who's going to get paid what for how long out of the trust, different things. But that's really setting up tax-free generational wealth. All right. So folks, I hope you've enjoyed this today. If you'd like to connect with us on a phone call and get some questions answered, please do. Please take that opportunity. I'm going to give you the phone number in a second. I have a 24-hour-a-day, 7-day-a-week text service that you can text to, and someone will text back to you shortly to set up a time. Okay. When you send me a text, let me know that you watched the recording online and give me your name and your email address inside that text. And we'll reach back out to you to set up a time to call. We can also send you some more information, digitally, give you some more stuff to study if you'd like. When you do that, you're going to get a free digital copy of my first book. It'll bounce right back to you. All right. So if you text the number I'm about to give you, you'll get a digital copy of my first book. Now, the second part of that book is all about cash flow real estate. It was written in 2012. Numbers are long since gone. But the first part of the book is 100% appropriate and frankly, even more appropriate today than it was when I wrote it. Okay. And that's free to you just by texting me to say, hey, I'd like to learn more. Reach out to me. Let's set up a phone call. Okay. We train people how these work, but we set these up for people nationwide. We can do this in any state in the union. So regardless of where I'm located, you don't have to be located. That's the joy of the internet and the insurance industry as a whole, is it's nationwide. So we can help you no matter where you're at. In fact, 97% of our clients are not inside our locale or even our state. Okay. So here's what you do. Take out your cell phone number, do it now while you're thinking about it, and text this phone number, area code 586-200-1886. Again, 586-200-1886. Give me your name. Let me know where you saw the video at, where you found the number at. All right. And give me your email address, because there's some things I want to email you as well. And then we'll set up a time to talk. All right. You can also visit us at Perpetual Wealth Academy. There's some more training programs there on different topics, investment, ways to book consultation calls with me that don't have to do anything to do with insurance. but just some other things. If you're interested in, there's more testimonials there, all kinds of those things. So again, text me. It's 24/7. It's not my cell phone. So you can, anytime you're watching this, you can text 586-200-1886. And you can visit us online at perpetualwealthacademy.com. Folks, it's been my pleasure. I hope this video has helped you, and we'll look forward to talking to you again soon.